Hi, everyone. It's time once again for another episode of my show, which I call Market Makers on BasisPoint Insight. We've had like very illustrious guests so far, and today's guest is no less illustrious. It's Dr. Bento Lobo. Welcome, Bento, to the show.
Wonderful to be here, Manoj. Good to see you again.
Absolutely. So, typically I do introductions of guests, and you are not that, present in India because you are US based. So I must give a little bit of context and a short little intro. But I must tell viewers that, it's a very heavy CV that Dr. Bento has. So I will attach it to the video once it's out for everybody's consumption. What I will do is I will be very brief because there is a lot to discuss after that. So Dr. Lobo is a PhD and a CFA in ECO. He's a head of the Department of Economics and Finance at the University of Tennessee in Chattanooga. Uh, Besides that, of course, with so many so-called experts spouting, their expertise on a lot of matters which really we or in India don't have much of a clue about. I thought it was time to get a real expert to tell us about what the current geopolitical situation means for all of us all over the world, and someone who's kind of born and bred and swallowed or drunk the US geopolitics and economics for over almost 3 decades now, Bento,
Yeah,
right?
yeah,
So I must also confess that I will call you Bento because we've
please.
we've got very long history. We studied in school together, and I must add that amongst all the heavyweights that I have interviewed so far for this program, possibly intellectually speaking, this is going to be the sharpest one, and I can say
Ah,
that with no dishonesty. So let's kick off straight away. Bento. Uh, you know, I want to focus on geopolitics to start with, and then we talk about how it impacts markets and so on. So, what is your estimate of what is currently happening geopolitically? Uh, what it's very difficult to decipher the mind of your president, but it has very far-ranging impact on across markets. So, what's your sense geopolitically? Is this going to be a long haul? Is this going to be a short haul? And if it is going to be either of them, then what does the world geopolitically look like after?
right. It's interesting that you should say that you think I have better insights into what our political leaders are suggesting over here. That's actually not necessarily true at all. There's a lot of conflicting, confusing policy pronouncements, information that is floating around. There's a little bit of headline fatigue that's happening as well. And it's hard to tell. I mean, good information is at a premium, right? We just are getting information that is not easily verifiable by the data. We're being told, on the one hand, this conflict is close to being resolved, but on the other hand, there's no evidence that that is in fact happening. And so, in the meanwhile, I think people scramble to find some kind of real-time data that would help inform the situation. There's satellite imagery being used to try to figure out what is actually happening in the strait, and what's happening in these various geographic locales. So, unfortunately, I'm usually a glass half full kind of person, but I don't have a good feeling about this ending anytime really soon. I think, yes, at some point in the near future, the bombs will stop falling from the sky. But does that mean that the skirmish has ended? It's difficult to tell when a war really ends because nobody actually sits down and signs a piece of paper anymore, and it's a diplomatic solution of some kind. And so it remains to be seen. I think some of the lingering effects of this conflict will remain for extended period of time. And the fear factor, I think, is a real thing. You know, air travel, for example, is going to be, a vulnerable spot. You just never know what is going to happen where. And so, I mean, this is all aside from the obvious issues with oil and the way that works its way into the economy. I'm just talking about more generally how wars tend to linger on. So I'm hopeful, but I just don't see that happening very soon. Yes, I can see, there's an off ramp that everybody tries to look for while saving face and making it sound like you're doing really well. But nonetheless, I mean, whatever those off ramps are, I think that will result in some immediate stoppage in bombs falling from the sky. But I think the lingering effects on the economy will be longer drawn.
We'll come to that in a bit, but more importantly, people at the start of the war and with the kind of jingoism that was coming up felt that it would be easy for the US, you know, by that I mean the president, to announce that the war was won, withdraw, and that was the end of it. So things would rapidly come back to normal. But that doesn't seem to be the way things are going from what you said. Uh, the other very concerning thing is that there is seems to be a little bit of I wouldn't say a little bit, some kind of consensus that there are likely to be boots on the ground. And how I hate that term. It's a very politically kind of designed term. It's to
Right,
impersonalize war, right? Rather than say there are
right.
going to be 10,000 soldiers, so there are going to be 10,000 boots on the ground. So I really hate it. But the reality is that's how, wars get trivialized these days. And for that reason, I wanted to ask you, if do you see firstly it going into a boots on the ground situation, and if so, then it becomes a real kind of battle of attrition, right? Like it can go the Iraq way,
Exactly.
the Afghanistan way, etc. Right? So what are your views on that?
Yeah, I that argument for boots on the ground has started to pick up real traction over here in more recent times, even though way back when we were told that that would never happen. And that is one of those factors that really concerns me because that, as you correctly point out, tends to lengthen and change the dimension of the war too, right? I mean, but what's interesting is in the U.S., this is a midterm election year. And so issues of that nature can be very, very sensitive. I think the effects of war really come home when unfortunately the death toll
Dead bodies.
starts to rise, right? And so people start to look at that and they see these images on the screen and so on. And again, one can only hope that that does not happen. But the rhetoric has gotten louder. People are talking about that. The leadership here has mentioned that more than once in more recent times, and so there's a very real chance that that could happen, and unfortunately make it a more protracted affair.
Yeah. So, next question I would like to dwell on is on markets, and more
Hmm.
specifically, oil, gold, and equities. So let's take them one by one, but under two scenarios. So it's like a little bit of a matrix, right? So if we look at the war getting over, or Trump declaring victory and end of war next week, let's say, then what do you expect? What would be your expectation for oil markets? Because oil has really been the most volatile of all the commodities.
Right. So, what we tend to do at times like this is we look at previous episodes, right? So, what has happened during the Gulf War of the early 90s? One could technically look at what happened with Ukraine in 2022. And much of what is happening in oil markets is similar price-wise. I mean, so you're seeing the surge in prices, as you would expect, right? There are very real reasons for it this time because there's a physical supply issue, right? Some 20% of global oil supplies are constrained in the strait, right? So they can't easily move. So there's a very real effect, if you will, on the economy. Now, let's assume a scenario where the war somehow magically ends and the Strait of Hormuz is opened up and things return to pre-skirmish levels. It still takes weeks, perhaps months, for normalcy to return, right? So in the meanwhile, you're still going to see economies that are oil constrained. The US actually is a net exporter, so perhaps not as affected, but uh, India, for example, right, or Japan and places like that, where they're very dependent on oil that comes through that part of the world. Uh, so it's possible that we will see lingering effects of higher oil prices and the indirect effects of that working its way through the system, right? Through production processes, through agriculture, through and therefore through asset prices. So yeah, I think relative to the past, this is likely to follow a similar trend in terms of oil prices, but I think to the extent that this skirmish is likely to be more protracted, uh, the effects are likely to be longer. You
You
know.
know, which by extension brings me to the other two critical asset classes, which have been really rogered this time. And gold has been a bit of a surprise because I guess there were very large leverage positions which have come off, but it has fallen typically in, it's a safe haven play. That hasn't happened. So gold and equities down from Dow Jones, for instance, down from 50,000 to 45,000, 6.5% in the last 2-3 weeks. So, and global equities. So there, that also, Bento, specifically, if the war ends soon, you expect that to go back to pre-war levels, those two assets, or not?
So yeah, I think so. Gold benefits obviously from safe haven, right? So I think what we have noticed with safe haven type assets is once the significant risk factor diminishes, it reverts to pre-skirmish levels, right? So I think that's a fair expectation. With equities, also, I mean, equities for the longest time, in my opinion, showed resilience here, talking about US equities. It's only in the past few days that the message has really hit hard and risk premiums have really jumped. And we saw massive sell-off yesterday, and officially all major indices are in correction right now, right? So there are winners and losers usually in stocks, as you know, and so some will gain, some will lose. But when risk premiums in general, risk aversion goes up and risk premiums jump across the board, you're going to see sell-offs, right? And so valuations take a hit from that perspective. And post-war, let's assume again this magical end to the skirmish. I think equities will impact. I think they will revert to fundamentals and they will ask the questions that they should be asking, which is, well, what are the fundamentals look like? Just to put this into perspective, prior to this war, the big hot topic was the disruptive uh, effects of AI, right? And it's not gone away. It never will. It won't go away. So that just returns to being the hot topic again, in my opinion. And of course, there's this cottage industry of what will the Fed do, right? And so there's the central banking piece there that will dominate the news as well. But we should expect that second quarter 2026, we should all be looking at corporate earnings numbers to see just where did oil come into play? Did it come into play? Does it affect consumer expectations? It works through a variety of channels, as you know. So, but generally, my short answer for you is I think equities will bounce back once we can reasonably say the skirmish is behind us.
A sub question on this topic, and I agree. However, Dow Jones had run up to 50,000 all-time high, etc. Not so much on the back of fundamentals, because we're seeing pressures on inflation side. We were seeing pressures on growth. Employment was an issue in the US particularly. So despite that, we had seen Dow Jones. So was there, in your opinion, a bit of a bubble there? And so that level is, going to be difficult to achieve, even despite, like your words, magically war ends.
So, the labor market here has shown surprising resilience. And, at unemployment rates around 4.5 or so, 4.4, thereabouts. It's been remarkably resilient. What we are noticing, and I can tell you this from the classroom because my students are seniors who are checking out the job market and so on and so forth. And the feedback I get is that it's not that firms necessarily are firing, but they're not necessarily hiring. So they're sitting on their hands and waiting and watching, right? So there's a degree of uh, uncertainty there, waiting for policy to play out. Just by the way, let's not forget there was the whole tariff story not that long ago, right? And so the effects of that and how would that play into the system, right? And so you add on top of that, you layer AI type effects, and labor markets are sort of trying to figure it out. I think bigger issues, are now what are the inflationary effects, and I think that's what's going to dominate the mood for a while.
So coming to the other part of the matrix, which is, in case the war drags on, there are boots on the ground, and becomes a war of battle of attrition, so to say, and drags on for a year or 2 years or whatever like it. But then, if I go back to past such activities, where typically the US managed to get down on the ground and have, some semblance of control over that country, then, I mean, if you revisit history, things should start getting back to normal, right? Under that situation.
Well, yeah, I mean, the most recent example we have of boots on the ground would be the efforts in Afghanistan and that sort of thing, and those actions lasted years, right? There is some effort on the part of the leadership here nowadays to point out that this is a different type of operation, right? And that this time it's different, right? The classic phrase that everyone likes to use. And if that's the case, maybe boots won't be on the ground for as long, right? But the near-term effects, the U.S. has always been insulated from having any kind of action on their own soil, right? And so when the action is far away, people tend not to pay as much attention to it, right? And so it tends to have less of an impact on consumer attitudes, consumer behavior, and spending patterns, right? The only time we really wake up to, well, reality, if you will, is when our wallets are pinched, we pay more at the gas pump, and so on, right? Groceries cost more, and then we start to wake up. So the channel through which it affects the everyday American is frankly through inflation. When they start to pay more for stuff that they need, and so it's there and it's in the jobs data. So these are the two places where we feel it in our homes, right? And so that's when people start to react. Kind of.
My question was more about, in case of an occupation, and which is
Mm.
possibly a worst case situation. And I mean, if there is an occupation, there is likely to be a lot of casualties for the US. Right now, they are going at it alone, which may lead to its
Yeah.
own set of political problems and on the longevity of such an occupation. But my question was more that if there is actually an occupation, then the problem doesn't it get more localized, and to that extent economies start coming back more to a kind of normal situation, apart from of course the fact that how the Gulf of Hormuz occupation goes, etc. So that was really my question.
Yeah. Uh, Nothing good comes from occupations, right? I mean, of this sort. But again, the action tends to be restricted to sort of a military perspective of this is what's going on. The manner in which the everyday uh, American, if you will, feels any of that is through the lingering effects, and obviously through the news, right? When you hear about losses and things like that, that really, really hits home, and people are very sensitive to that, right? And so it has been one of those in a midterm election year. It's unlikely that anybody wants to see that happen, but despite that, the rhetoric right now is pointing toward as you point out, 10,000 uh, troops being deployed. That's a lot of people. So yeah, I'm not a military expert, but it just seems to me from observing the past that these things typically don't shake out very well, and they tend to linger and end in unforeseen ways, right? So political leadership, especially at politically sensitive times, are looking for those off ramps to get off this thing and say, declare victory of some kind and say, all right, try to put this behind us. So I'm hopeful that that's the way it'll play out.
Now, next question. I mean, this is really a concluding part of our conversation, and possibly your favorite topic, because I do know that you worked with the Fed, Atlanta Fed, right? And
Hmm.
my life, most of my life, I have been a fixed income, bond market kind of guy here. So
Yeah,
we've had to be, by not by choice but by necessity, Fed followers, Fed watchers, however, whatever you may call it, because whatever the Fed does has an impact all over the world. So I wanted to ask a couple of questions really. One was, what is your view on the fiscal impact of this adventure, misadventure, however you may call it, uh, on the US? Is it going to be significant enough? We know he's asked for $200 billion more of funding, but is it going to be more significant than that? Is 200 billion big enough to shake up Powell, and are we going to see some changes in fiscal policy? Is it going to affect monetary policy? We discussed right offline. I think the US Fed is one of the few who has a dual mandate. Most
right.
most central banks have inflation as a mandate, but
A hierarchical mandate. Yeah. Hmm.
yeah, yeah. So do you want to comment on both these points? Actually, the
Yeah,
effect on the
absolutely.
fiscal.
I mean, fiscally, uh, my understanding is that this war costs the American people on average a billion with a B, US dollars a day, right? So the longer this plays out, the longer, the more it's going to cost, right? And as you know, where do you get it? You have to go borrow it, right? Because that's how they're going to have to fund it. So the fiscal scenario, even prior to this, was less than what one would consider healthy. But obviously, a war exacerbates that problem. So if you switch gears and you go to the other side of the policy spectrum to the monetary policy maker, right? The Fed, as you correctly point out, is now sitting on the horns of this dilemma, right? Which is the dual mandate. On the one side, price stability; on the other side, stimulate employment and growth, right? So at this point in time, they're looking at the labor market, they're looking at the growth numbers, and they look relatively resilient. So the focus is primarily now on, well, how inflationary is all of this activity going to be, right? And the Fed's policy tools are better suited to fighting inflation, frankly, than to stimulating growth. And so at this point in time, they are on a hold pattern, right? And a year ago, and maybe not even a year ago, maybe 6 months ago, we were talking about two, perhaps three rate cuts in 2026. Right now, we're thinking none in 2026. And in fact, markets are pricing in a higher probability of rate hikes than rate cuts right now, which is clearly reflective of the inflationary expectations uh, going forward. The Fed has the interesting challenge not just of managing inflation and growth, but of managing inflation expectations. And so it's really, really important that the Fed be perceived to be a credible policymaker. And I say that especially because in the not too distant past, there were serious questions about Fed independence being threatened and so on. And so the independence of the Fed becomes especially important at a time like this. Uh, Mechanically, we're going to actually be having a new chairman, a new leader of the Fed sometime in May is when
May.
Jay Powell's term runs out. The nominee is Kevin Warsh, who has not yet been ratified by the Senate, but is in the process of being interviewed and so on. So, there's some change that is likely to come from the change in leadership, anyways, in terms of perspective and so on. But Fed watching, as you say, I mean, not just here, but I guess globally, is a whole cottage industry by itself, right? So, so we have to sort of watch what's going on there. So as of now, it just looks like the Fed is on hold, and certainly the rate cut discussion is off the table in the near term, which, in some sense, is to be expected.
So, which is actually something else which I just thought about is that, most central banks, particularly
Hmm.
larger ones, have reduced their US dollar treasury holdings. India is one of them. I know across Asia, maybe I've heard numbers from 5 to 15%, let's say, in terms of US treasury holding. Uh,
Hmm.
do you think that has a big, role in Fed decision making in terms of rates, or are they watching it closely? That is it going to be a big issue for them going forward?
Are you talking about de-dollarization and like getting away from dollar-denominated assets?
So that is one part. So you're seeing increasingly people or countries trying to move to other currencies and stuff for billing, but that is one part. To be honest, I'm not one of the big votaries of that because I think it will come back once the US uncertainty is behind us. More
Hmm.
importantly, I was asking about central banks holdings, their reserves. So the FX reserves that central banks hold.
Hmm.
We've seen
Right.
an ongoing reduction of US treasuries in their reserves. And I recollect, 7, 8, 10 years ago, US treasuries used to be 40, 50% of even in our Indian central banks FX reserves. And of course, US assets used to be 55, 60%, including cash. So that has come down quite a bit. And data is that it's been the same for most large central banks.
Yeah, I think, you know, that trend is likely to continue. It's sort of linked to this idea of the dollar as a global reserve currency and dollar-denominated assets as a consequence being particularly attractive, right? Treasuries, for instance. But as skirmishes of this sort, I keep using the term skirmish, it's a war of this sort will likely reignite, right? This concern about dollar dominance in global markets. There's not a great alternative to the dollar as a reserve currency, but dollar dominance will resurface, and I think part of that will show in reduced holdings of dollar-denominated assets. I don't expect that it'll be a sharp reduction, but it'll be a trend reduction in dollar denominated.
Uh, I have actually run out of questions, so there is nothing more to ask. I think we've done the whole gamut. You've answered quite candidly and clearly. You have anything to ask or add, or something I have missed out in the course of this
No,
conversation?
I'd like your view on what you think is going on, and in particular, how this is impacting the Indian economy. I'd really love to hear what you have to say about
So maybe a couple of points. One is that, having been a trader for most of my life, I tend to think like a trader, and
it.
my view is a little bit contrarian. I think from most people's view in the market, I think most assets will come back very strongly once this is over. I also believe that you're likely to see this over faster than uh, you know people expect. Uh, I think it's just a question of finding an excuse. But and like you said at the start, you're a half glass full kind of person. I'm more like a full glass full kind of person. So maybe it may be coming from there. But typically I have found that as a trader, again I say this, that the maximum money is made when you buy at the bottom, when things are looking really bad and everybody else is selling, and everybody else does seem to be selling now. Fundamentals, particularly for Indian markets, don't seem to justify the kind of selling you've seen in equities. Even the level of dollar INR that we have seen over the last, I think, couple of weeks has seen a big attack on the currency. Some flow of capital, away from the country. Just to add, but there was a time in 2013 when there was the taper tantrum, as you might recall. The currency had come under a lot of pressure. We'd seen almost 17, 18, 20% of depreciation in a matter of just 2 or 3 weeks.
Mhm.
My last interviewee was Dr. Subbara, who was the governor at that time of the central bank,
Perfect.
RBI.
Yeah.
And we were talking about it. In fact, in that interview, we discussed it. And to be honest, we I was involved to a little bit of extent in designing a product to get a lot of money in. We got a lot of non-resident Indian money in and leveraged money. So you never bet against the RBI. That is my other theory. And having spent a lot of time here, you never bet against the
Hmm.
central. But having
Hmm.
said all that, I do expect things to be better. India is suffering, and it's likely to suffer more, like you rightly pointed out, because of oil, mainly because of oil. I don't think, apart from oil, there are that many issues. We have not been very successful in building oil reserves as we should have in the past. So, you know,
Hmm.
we remain at the mercy of our neighbors. Having said that, we've been friends to uh, even staunchest enemies, as you already know. So Iran is a friend, Israel is a friend, US is a friend, Russia is a friend. So I think that balancing act continues, and hopefully it will not lead to a severe oil crisis. In the event that an oil shock, as we used to call it in the olden days, in the event that some stability comes back, we already have the Gulf of Hormuz, I'm told, open for us. So to that extent, we are seeing ships coming our way.
Right.
All in all, but we could be wrong, right? It's all a probability game, and
Well, it's in
it's
everybody's best interest to have oil flowing again. It's just that it's political posturing right now, right? So uh, when you want to try to claim a win where there are none, you have to do some things that don't make economic sense, right? Uh, Stopping the flow of oil hurts revenues for oil-producing countries. It it hurts the users of the oil. There's no good economic argument. It's a war argument, right? So that's part of it.
so, in conclusion, I must refer back to your one of the points you made, and your president said it right. He kept referring to this dalliance or this war or this attack as an excursion. And for all my life, I knew something called incursion, and excursion was always a kind of a holiday. So I do hope indeed he meant it was an excursion. So like it was a holiday, and holidays come to an end. So hopefully, I do hope that it comes to an end shortly, and we're back to business as usual.
I hope so as well, Manoj. I hope that the next time we talk, we'll have a lot happier stuff to talk about.
So great, Bento. It was lovely talking to you. Thank you very
You
much
as well.
for making the time. It's early on a
Sure.
Saturday morning in Tennessee, so and it's a bit late in here in the evening in Mumbai. So it was great talking to you. Thank you so much. I think you added a lot of
My
value,
pleasure. Thank
answered
you.
a lot of questions for viewers. Thank you.
Thanks.
Cheers.
Thanks, Manoj.